We're coming, and we ain't backing down.
We don't need a bunch of cats in here looking in the mirror.
Everybody just do your job. You understand that?
Hey, will you shut up?
I'm bitterly disappointed with the officiating today.
Guys being dudes.
And they run through our like through a tin horn, man.
There has been quite a lot of talk lately, including from several conference commissioners and administrators at blue blood schools like Florida State, about the impending arrival of institutional money in college sports. Private equity, in particular, leading that conversation. The Big 12 has explored selling a piece of its media rights in exchange for what sounds like a quick influx of cash to close its gap between themselves and the Big 10 and the SEC. The new commissioner of the American Athletics sounds very open to doing something similar. FSU is considering private equity maybe as part of their escape hatch from the ACC, and that's just what we know. On this show, we have been very skeptical of how this all might play out for the existing enterprise of not just college football, but all of college sports, because we've seen this story, this private equity and this institutional money story, go sort of badly for enough industries, including, certainly biased here, our own media industry, that there is some skepticism baked into our approach. But it's still probably happening, and we know football a lot more than we know the world of private equity or mergers and acquisitions or investment banking. And my guest today is someone who does know markets, who covers them in detail for one of the biggest financial newsletters on the internet. It's Doomberg, hosted on Substack, the same platform that we are on, and run by the eponymous Doomberg. Doomberg is also a college football fan, still basking in the afterglow of Michigan's national title, I am to understand. And he is here today to give us an informed and, who knows, maybe alternative perspective, though I don't know yet, on what is going to be a new kind of big money coming to college sports. I'm Alex Kirshner. This is Split Zone Duo. Doomberg, how are you? Welcome.
Alex, great to be here. Fun to be on another major Substacks platform. And the marriage of our two topics is an interesting one, and one that we just happened to publish on this morning. And so I really appreciate the opportunity to come on and talk about it.
Absolutely. So we are recording this, full disclosure, on Thursday, July 25th. Who knows when we'll release it, though you'll know by the time you listen to it. This is a really interesting piece that you wrote about, premised on what is the value of an entire university. And this is an interesting tie into the college sports thing, because college athletics and college football in particular is a really valuable piece of, the broader what a university is worth. You wrote in part about the University of Texas and the massive shale wealth that drives a lot of their holdings, just a massive bed of wealth that is controlled by the University of Texas and its system. Tell me about what you learned when you were doing this research.
You bet. So the thing about the University of Texas, it's kind of the exception that proves the rule. In other words, the very definition of what a university is undergoing a semantic shift in the U.S. And especially with the very large, mostly public universities like the University of Michigan, University of Texas, University of California system, University of Florida, you name it. These, and we contrast this in the piece, these are not predominantly institutions of higher learning anymore. They've morphed into these, enormous public service institutes with sort of a hedge fund attached to it and an enormous amount of value embedded under them. And, we compared it to the British system where, majors still matter and professors still teach and exams are rigorous. And that's just not the way it is in the US anymore. And in fact, if you go to a University of Texas, you're embarking on a lifelong journey with a brand. You get camaraderie, you get access to the alumni network, you get all manner of doors open for you just for having the brand on your resume, almost regardless of what you study. And this is consistent with the sort of liberal arts education. There's not near as much focus in US universities as there are in the British system, which is, of course, in the Commonwealth of Nations like Canada, New Zealand, Australia, India is very, very much influenced by the British system. But to the rest of the world, and we write for an international audience, the US university system is really quite baffling. And so this was our first foray into it. The University of Texas in particular, which I'm sure we can get into, is the most valuable franchise in the world by a wide margin. And it all arises from fortuitous land grant given to both the UT and Texas A&M, 2/3, 1/3, UT to Texas A&M is the split, enshrined in the Texas Constitution in the late 1800s. It's called the Permanent University Fund. And over a series of gifts, it has accumulated 2.1 million acres of land. And when that land was originally gifted, its intended use was for grazing and to generate a little bit of revenue for the schools.
Yeah, turned out to have a little bit more than grazing potential. I understand.
Yeah. So as we said in the piece, in a happy coincidence, a huge swath of that land happens to reside in the Permian Basin. And we predominantly write about energy, the intersection between energy and finance, energy and macroeconomics, energy and politics, and now energy and college football. The Permian Basin is the most prolific shale in the world. It produces an enormous amount of oil and natural gas. It's actually, on a standalone basis, more prolific than the country of Saudi Arabia. And the University of Texas happens to have licensing rights to 2.1 million acres in this jackpot of modern energy. And the PUF, the Permanent University Fund, is run with a very serious sort of classic Texas discipline. They have a mandate to pursue maximum value for the university systems. They gate their distributions through those systems in a way that ensures the long-term viability of both the fund and the schools. And they have been prolific in licensing their lands, both for oil and gas, and we could also talk about wind and solar because those lands are uniquely positioned to extract value from those opportunities as well. But in so doing, they have essentially, our best estimate is the sort of market value of the University of Texas as a whole, which involves 9 campuses, 4 major hospitals, 250,000 students across the whole system. It's probably worth $100 billion.
Yeah.
And so the fact that the University of Texas head football coach makes $10 million a year makes a lot more sense in the context of those kinds of numbers. Now, not all universities are that rich, but many are striving to be that rich. And so in the context of that, the move by private equity to try to get a piece of that cash flow, look, the cash flow, the revenue at the University of Texas as a system, which includes government grants and hospital billings and student tuition, was over $30 billion last year. It's huge. It's enormous.
Yeah. It's compelling because I think that there has been very little analysis done of what college athletic franchises are worth on their own. The Wall Street Journal took a crack at this in about 2017 or so, and you would not be surprised that Texas football specifically, was the highest estimated valued property in college sports at, I think, about $1.5 billion, according to that analysis at the time. Whatever it was, it would be more now because of the move to the SEC and the way that the rich have sort of gotten richer in college sports. But yeah, I do want to point out to our listeners, it's a really interesting story about how American colleges have become so valuable. And this one in particular, this system in particular, you can find it at newsletter.doomberg.com or doomberg.substack.com. That it's a pretty interesting place to check out for energy news, financial news. And it did really clarify something for me, Doomberg, which is, as you say, like, it's almost surprising it's taken this long for the money types to come for big time college athletics. Like I'm almost taken aback that it's 2024 and the Oklahoma Supreme Court decision was 40 years ago now that sort of opened the floodgates for conferences to do TV deals. And we haven't really had large scale private equity or institutional investment entry into the sports slice of this massively valuable enterprise that you're talking about.
So perhaps it'd be useful to describe what private equity is, just briefly for those that aren't familiar. But private equity is essentially, has a bit of a bad reputation on Wall Street as being predatory financing. They buy old companies, they load them up with debt, they fire all the people, they squeeze all the cash out that they can, and then they extract as much money as possible for themselves and their LPs. Not all private equity is that way, but there's a bit of a stench is the wrong word, but there's a bit of a brand challenge that perhaps university presidents who still fancied themselves as champions of higher learning and all of the good vibes that go with considering yourself to be sort of a member of the upper echelon of the elite. Dirty money is too strong of a word, but that's sort of the thought. And many people in the labor market, for example, have a bitter feeling about private equity because they are the victims of these reorganizations that they often do, which can be pretty brutal. But private equity has been essentially vacuuming up most of the U.S. economy. I mean, funeral homes are all private equity now. Trailer parks are private equity now. HVAC companies.
Veterinarians. Yeah.
Oh, yes. I mean, if there's a standard playbook to copy and paste across every small town and city in the country, private equity has tried to squeeze, juice out of that lemon. And so I do think there was a bit of a resistance to taking that money. But I think it's kind of like game theory. Once one or two do, it's all just going to get rolled up, because how can you compete otherwise? Put it this way. The book value of Texas is $70 billion, and we think the market value is substantially higher than that. That's the exact kind of arbitrage that private equity likes to feed off of, where something is worth a lot more to them than it is on the books. They pay somewhere in between, and then they capture the delta. So it's inevitable in our view that big money's coming. And I think the paying of the athletes is the sort of taking the finger out of the dam that's going to allow this to sort of all this money to come pouring in.
Well, that's sort of an interesting thing about the paying of the athletes and the timing of this, because, and I want you to correct me or take issue with anything that doesn't make sense to you here, but it seems like it's an odd timing fit because, and kind of an odd character fit, because college football has big money in television deals, but it's a bunch of reasonably small businesses, not the University of Texas football program, but, there's a lot of Kansas states and there's a lot of coastal Carolinas and there's a lot of Sam Houston states as well in this sport. And, it strikes me that those businesses can't exactly scale like a lot of for-profit businesses, consumer goods businesses, or other areas where private equity might get involved. And at the same time, those labor costs and what players are going to be paid, you say that it will allow the money to come flowing in, but it sort of seems like a source of regulatory uncertainty right now. I mean, who knows what Congress is going to do or isn't going to do in 2025, or who knows what the judiciary might say or not say about the legality of how college athletes are paid and how much they should be paid in the future. And athletic directors don't know this. University presidents don't know this. Would that not scare away private equity types or any institutional investor type? You seem to think that they would see it as an opportunity.
So yeah, a couple of things that the way in which we look at things that might differ from you. Private equity basically owns the government. And so government involvement is an edge for them because they can buy whoever they want, get whatever they want done. But we'll come back to that. The name, image, and likeness sort of revolution where athletes sort of jumped the shark from being student athletes who were paid in tuition and sort of in-kind education, became essentially minor league athletes for the major sports. And then you lay on top of that the transfer portal. So what those two developments has done is laid bare the fact that was kind of like an open secret that everyone playing college football really went, not everyone, but a fair bit of the people playing college football were there to try to get into the NFL. And the NCAA served as a free minor league proving ground for potential future athletes that might play in the NFL. And so once the players started getting paid and then they didn't have to sit out a year to transfer, they weren't really, the veneer of student athlete was kind of ripped off. And so once that, I believe that is the gates that opened up to all manner of deals that university presidents might have viewed as unsavory before.
Because you got to pay, because you got to find the money. Yeah.
But not just that. I mean, most of the NIL stuff is paid by wealthy alumni, and this is why you're seeing the bigger get richer. I mean, I don't think the University of Alabama is spending too much on athletes. I could be wrong. It's not something I've studied too closely. They wouldn't need to because they could just follow the money from the major donors. Look, I can tell you that the University of Michigan Alumni Network would write a big check to get all the best athletes to come play for their schools. Like this is where we're headed. That's the reality. And I think that the very nature of what a university is changing in the US. And so for student athletes, the university can and probably should just be about the athletics. The people that are going to university to study medicine need not really spend all that much time studying English. And if you're going there to study your craft, which is, pro sports is a craft, it's very valuable for those who succeed. Maybe you just go there to study athletics, to be an athlete. We've had this phoniness about the relationship between the student athletes and the disparity between the student and the athlete. Some student athletes are great students and they're going there to pursue both, and that's great. But in the main, at the biggest schools, nobody's going to University of Alabama without pondering whether they might not make it to the NFL, and perhaps hoping. So, I mean, they get 3, 4, and 5-star athletes every year, and with the transfer portal, the the 5-star athlete who's back up to another one at a different school shows up at, Alabama because they have a weakness in the secondary or whatever. Like, this is actually a minor league franchise. And we're talking about football, but it's true across the other sports as well. Baseball players attend college as a proving ground to go to the MLB, or they play minor league baseball. Like these hockey, right? Same thing with the big time hockey schools. They could either go play in Ontario or Quebec, or they play, in the NCAA.
Yeah.
So this is the trend. And I just think that the acceleration to reality, because I think it was always this way, we just sort of lied to ourselves and said it wasn't. That the acceleration to what is actually going on and recognizing it as not necessarily a bad thing, just a thing, it has been really the big push has been paying the players and allowing them to transfer as sort of basically annual free agents.
Sure. And with the apparently upcoming institution of this big settlement, the House settlement, schools are going to have to find 22, 23, 24 million bucks a year if they want to be competitive and pay players directly on top of what their donors are paying. So I guess I could see where you would want to get some outside money. It's also interesting, too, because you use the term minor league. I also understand that private equity or private equity backed investors have been literally buying up minor league baseball teams at a shocking rate. Like they've rolled up like a quarter of the entire minor leagues. I believe The Athletic reported back in the spring. Do you see, I mean, from a talent development perspective, it's easy, college football is the NFL's minor league and it's a free one for the NFL. Do you see any other parallels between, from a financial perspective, like what this type of investor group might see in like minor league baseball to what they might see in college sports?
So what private equity specializes in is observing and then buying a business that is not run for pure financial reasons, taking over that business and running it for purely financial reasons, and then rewarding the owners as lucratively as they can. And layered over top of this is an incredibly strong lobbying effort at the state and federal level, where they're more than willing to look at the return on investment in donating to politicians to make sure that they're not encumbered in this endeavor by antitrust laws or pick your favorite regulatory constraint to the roll-up. I mean, private equity will invest in any business that it believes it can flip for a profit. And as long as that profit potential is there, they will do it. And it doesn't surprise me that they're rolling up minor league baseball teams because they're running out of things to roll up. They're literally eating the American economy from the inside. There's several books on the matter, the names of which escape me now, but if you just Google, private equity rolling up America, you'll find them. It's interesting. It's kind of scary. It's a trend. And so our view as analysts is you just sort of plot the last 3 points on the line and look forward and look at the direction. And unless something changes, that's the direction we're going. I think we're going to see every major sports oriented university cut deals with private equity or outside investors. And private equity is just one form of outside money, by the way. I mean, hedge funds could invest in, wealthy individuals can invest, alumni could pool their money and create structures that would invest in their schools so that they feel as though they're doing it in a way that is consistent with their long-term ambitions with the schools and not just a financial return. You're going to see all of these things. Money is going to pour in. By the way, the valuation of UT, I would put it at 10 billion over under. I mean, if you
the football team, yeah, of course, yeah. Look, the head football coach of the Longhorns makes more annual salary than every manager in the English Premier League, save one. Like, it's a major franchise. As I'm sure you know, the Washington Commanders were $6 billion when they sold a year or so ago, a little less than a year ago. You think that Texas is worth 10 when an NFL team in a major media market is worth 6?
So the Commanders have a lot of baggage.
Yeah.
And I would put the comp at the Cowboys, and the Cowboys are probably worth 10 to 12 right now. I think in Texas, you could argue otherwise, but my view is that the Longhorns are at least as valuable as the Dallas Cowboys. I mean, you have, and by the way, like there's so much energy wealth, deals being done on nothing more than a handshake in the stands of a Longhorns game. Like, it's incredible what that team is worth. And I think if you actually, you can't really separate it, right? Because it's not a standard business. So we're just talking hypotheticals here. But to give you a scale of the numbers, like, I mean, the big house sits 115,000 people and sells out every game.
Yeah.
And it's one of the most powerful alumni networks in the country. And, like the UT, and by the way, like the University of Texas system has more than just the Longhorns in it, but the Longhorns are obviously the straw that stirs the drink. But that football program, I would say, if not now, within a year or two, three, I mean, there's someday it'll be worth 10 billion easy, and 10 billion will seem like a deal. And I think the Cowboys will be worth 20 billion. I mean, inflation but look, as AI and compute take over more of what humans do, entertainment and uniquely human activities like seeing outstanding athletes do things that thrill us becomes incrementally more valuable. And so you see, even chess, online chess has exploded in popularity, even though computers have perfected the game. Essentially, no human could even get a draw against a mediocre chess engine today. But a child prodigy who's 12, who plays chess at a grandmaster level, is intriguing and gets the clicks.
Yeah.
The number one video on YouTube this week is Bryson DeChambeau playing with President Trump. Last I checked, 7 million views. This is where the money is going, entertainment. So the mega trend, especially as computers take over more of what it is that humans used to do, you're left with online gaming, sports betting. Wall Street is becoming more like a casino for that reason. Stimmy checks led to all kinds of bubbles in the stock market. Humans are running out of things to do that they used to do, work the fields, pick your favorite, and they're left with being entertained by other humans doing uniquely human things. And the college football franchise the way we look at value is what passion does it invoke, right?
Yeah.
And nothing invokes passion like your college football team winning a national championship, right?
No, as you've experienced recently. Yeah. Here's what I'm still kind of hung up on, though. All right, so I'll take. It sounds plausible to me that if the University of Texas created a Longhorn Football LLC and put all of their football assets into something that could be invested in easily, that it might be a $10 billion property. Okay, and maybe Michigan and Ohio State and all the rest are multi-billion-dollar franchises, and it's easy to see how you might do some financial engineering where private equity or another institutional investor that's not as focused on using debt could make a lot of money. But there are, just in FBS, 120 teams that are not in that blue blood rank. And, the Big 12, for instance, is maybe the most publicly exploring something like this, where, and this is based on CBS Sports reporting from June, is talking to CVC Capital Partners about selling a 15 to 20% stake in the league that would value the Big 12, so not the schools, but the Big 12 as a $5 billion-ish thing. Where I'm confused is that there are only so many Utah football fans in the world. And let's say that the Big 12 gets a big cash influx that it distributes to its schools. And as a result, Utah, in the next economic iteration of the sport, becomes a paying for players powerhouse and builds the best roster in the country at the University of Utah in Salt Lake. And things are great for Utah. And they win a national title, even though they're in the Big 12 and they're not making the same big money as the SEC and the Big 10. Where I'm confused is that it's not like that's going to lead to 4 times as many Utah football fans. It's not like they can quickly, they already sell out every game at Rice-Eccles Stadium. It's already, you can't just stuff tens of thousands of more people in there. My dad in Pittsburgh is not going to suddenly be begging to watch every Utah game and allow, the Big 12 to make way more money in its next deal. So my confusion, Doomberg, is at what point does this financially make sense? Because sure, it would be really fun for Utah if they took all this money and bought a bunch of players or hired great coaches or whatever and took the next step to being a nationally elite national champion type program. But that doesn't create exponential returns that would excite investors, does it?
So this is, I think, a really important point, and hopefully my answer opens your eyes to something.
Yeah,
the valuation of the Big 12. By the way, when I say UT is worth 10 billion, I think they could raise $1 billion at that valuation. I don't think somebody's going to stroke a check for the full 10 billion and own it. The valuation of the Big 12, which is what's left of the Big 12, that they're tossing about, is proof of my valuation of the UT Austin football program, because it's not like that's going to be the only deal and suddenly all the beneficiaries of the Big 12 are going to leap Alabama and Michigan, Ohio State because they have this money coming in. No, they're making that deal knowing that everyone else is going to make a deal too. They're putting a price on the remnants of the Big 12 that is remarkable. $5 billion. But the moment that deal is done, everyone else is going to have a comp to go and do their own deals, right?
Sure.
And so you're like, just here's the analogy I would use. The salary of NBA basketball players from the 80s till today, what has happened? It's outrageous how expensive these pedestrian, I mean, they're all super talented players, but pedestrian professional players are getting 10, 20, $30 million
Look,
a year type contract.
Full respect to Isaiah Hartenstein getting 75 mil if you can do it. But I understand. I understand what you're saying. Yeah.
And that is going to happen with football, and college football in particular. It triggers deep passion among the alumni, and these alumni happen to be very wealthy. And we are going to have what's known in the vernacular as price discovery. So if that Big 12 deal were to happen, that's not going to happen in a vacuum. You don't think Alabama can do its own deal? What's it going to value Alabama at? It's like when the ex-CEO of Microsoft bought his NBA franchise, the Clippers. There's going to be a wave of price discovery. Cash is going to flow into it. And not all private equity deals make sense or make financial returns for their investors. I mean, they often lose money for their investors. It happens. But there's going to be FOMO, man. Like there's going to be fear of missing out. This is the next big wave. The first in are going to make the most money. And here's what I think is going to happen. Here's the long run equilibrium state of college football. You're going to have twice as many viable college football teams as there are NFL teams. And then every other college football team outside of that, say 64 teams, is going to be a minor league for those teams via the transfer portal. And so you're going to have the smaller schools with a great athlete who maybe had something in their record that, caused some of the recruiters to pass on them, but they set themselves straight and they had a great year against sort of second tier competition. And they're going to get their chance to transfer to Colorado and go play for prime time. This Coach Prime is going to be so good. That's what's happening today. It's an ecosystem that's already evolving. And so you have these long shot recruits going to the second and third tier type schools. And then when they really display outsized talent and that they have sort of corrected whatever flaws that were in their records, maybe it was an injury, maybe it was, pick your favorite, they then become, I'm going to step up and go to Alabama. And so there's going to be kind of like the English Premier League has multiple sort of tiers below it. They're all professional soccer players, but you relegate or you step up to the next league. And then eventually, the best football players, as they would call them, get the big contracts in the English Premier League eventually if their talent proves out. And I think that's where we're going. I can't see much more than 64 competitive teams, and really probably 16 of those 64, the Notre Dames, Ohio States, Michigan, Texas, Alabama, Georgia, are going to be perennially competing in a 16-team playoff, essentially. And every once in a while, Minnesota will punch above its weight, or pick your favorite. Texas A&M might find its way in there. But by and large, in these types of situations, there's something called sort of the Pareto chart. I mean, 80% of the values in 20% of the schools. And that's where we're headed. And college football will be no different. Yeah. And I think we're on the cusp of a bubble in the valuation of both college football franchises, their associate universities, and the star players. I think the star players are going to be making what is today NFL money at the college level in the years to come.
But I'm still wondering, and I think I kind of see where you're going with this. I mean, not just on the Super League point, which I think a lot of people, including my co-host Stephen Godfrey, has been talking about for a long time. But it doesn't seem then that you would think that, upper middle tier Power 4 school, again, I'm just going to use Utah as an example because they're a great program, but they're not going to be rich like the Big Ten and the SEC schools. Like, do you see either a major long-term financial benefit or competitive benefit then to the non-big dogs chasing these kinds of deals? Or do you think that they might be destined for disappointment?
I think they'll be worth far more than they are today, and they will be in the exact same spot in the financial pecking order that they exist today. In other words, we're just seeing the early signs of price discovery. So Utah is one of those schools that occasionally punches above its weight, finds itself in a major bowl game, or it cracks the top 10 for the year, but most of the time it pulls in the top 25, but isn't really a serious threat for the national championship.
Fair to say, yeah.
And so there's a value to that. Their alumni network is valuable. They have wealthy donors. Maybe they pay up and get a great coach who's a great recruiter, and they spend a decade in the sort of the bottom half of the first tier. And all those things are what people chase. Look, the second and third tier soccer teams in England are still very valuable. They're less valuable than Manchester United, but they're valuable. And my point is, University of Utah is more valuable than we thought it was, which only means the University of Alabama is way more valuable than we thought it was. And the Nick Sabans of the world will make $25 million a year soon. That is the trend. It's coming. And the ripping off of the veneer of this being some sort of pure, student athlete embodiment of, education and creating people for society, and all that's gone. This is a very popular upper minor league football program that feeds into the NFL. Look, the NFL draft is second probably only to the Super Bowl and the conference championship games, and is as far as like popularity and eyeballs, and it's a 3-day event now, right? I mean, I'm old enough to remember when Mel Kiper made the NFL draft interesting. This shows you that the confluence between college football players and the NFL is deeply linked, and people are very passionate about both. In fact, I would argue that the sort of the median UT Austin football fan is more passionate about the Longhorns than the median Dallas Cowboys fan is about the Cowboys. I mean, if you went to school there and you basically grew up in that environment and you spent 4 years there and you worked with alumni and you've been to homecoming games all these years, like that, like people love the Detroit Lions, but people love the Michigan Wolverines, right? I mean, it's just a different level, and passion produces dollars. And so, this is where we're going.
Your theory of the case with, like the Big 12, for instance, it makes some sense to me that, they want cash now, and everyone else will make their deals too. But the Big 12, because it's live sports, it's human experience, will be worth so much more in the future that that perhaps this could work for everybody, and the investors can get their return, and the schools of the Big 12 could be fine. My squeamishness comes from my background. I mean, I've known a lot of people who have gotten laid off from newspapers because of the worst archetype of these types of deals. Do you have any, like, what is the worst case scenario? Like, what do you see for college sports specifically as the way that this could go really bad? People like to joke. I don't know if they're joking, but like some guy in a boardroom in Manhattan gets to lay off the fourth best swimmer on the swimming team because they bought into the athletic department. How would you see a bad outcome unfolding for athletic departments?
I don't really see a bad outcome for athletic departments, and there is an important difference between the two. But before I get to that, I want to say that what private equity did to the newspaper industry has been a bonanza for you and for us, right? Because then all of a sudden, independent creators can create their own audience, and there's no reporter in the world producing the revenue that Doomberg produces, and we're a very small team, and we were early, and we sort of have defined the finance category on the platform. And so that's been great. And so it's just like with college football, right? Like the big early winners define the categories. Now, the big difference between sort of what happened in the newspapers and what we suspect will happen with the college football franchises is they're not going to get controlling stakes. So they're going to be minority participants, minority owners, inject some cash, and then get economic benefit of the growth that's coming in this field. But they're not going to be given, voting rights. They'll have a say, perhaps, if they own 20. If somebody strokes a check for 20% of the University of Michigan, they're probably going to be consulted on who the next head football coach is going to be. That's normal. But they're not like with the newspaper industry or the funeral home industry or parking lots or pick your favorite, where they're buying the entire thing and they're running it day to day. Now, there are two ways that a private equity firm will get remuneration on their investment. It's the annual cash flows, but also a bet on the increasing value of these franchises over time. And they could sell their, they could sell their ownership interest to somebody else at a higher price. And they are measuring both of those when they're making these investments. For my point, like I see this as a giant megatrend, and they're very smart, and they probably see it too. And so getting in at, if you could buy 20% of UT Austin for a $2 billion check, and you harvest some cash flows along the way, and then sell that 20% interest for $5 billion in 7 years, you're going to be fine. And that's the calculation they're doing.
If you're private equity, you'll be fine. But let's say that I don't really care about if the PE fund is fine, and I'm just more interested in college sports today, staying, maintaining some of their current character. Obviously, this is an evolving thing, and I don't want to be a Puritan about that at all. But would you worry at all about that perspective of it? I know you're a financial mind.
I would say that the private equity influence will not meaningfully change the trajectory we're already on, right?
Yeah.
If you think back, to the University of Michigan football program, back in the 90s, you had Tom Brady spending all of his 4 years at Michigan basically backing up Brian Griese and Drew Henson, right? That wouldn't happen in today's college football, right? He would have transferred out of there. But he spent, of course, he did some things at Michigan, but he spent a lot of time on the pine for a guy his talent who went on to be basically the greatest quarterback of all time.
Yeah.
That wouldn't happen today. So the purity of college athletics has already been spoiled. And since private equity is not getting controlling stakes in these leagues or franchises or universities, they're going to be minority partners in a growing field. The influx of money will probably accelerate the trends that we're seeing, but that will happen either way. It's basically the end state is clear. And it's just a matter of the sort of the friction of the transition to get to where we always kind of were, wink, wink, smile, smile. And now, at least I would say, as an unabashedly positive thing, the student athletes who were generating all the value are now finally being paid. I mean, how tragic was it that a superstar in their senior year breaks a leg and doesn't make it to the NFL, and they put all this time and effort in and they basically made no money?
Sure.
At least now you'll have 3.5 years of, of compensation and a brand and a team around you that knows how to extract value from that brand, which is what I like about the NIL system. Is it makes people aware of the value of their social media properties and of their, their jersey numbers and things like that. And they get a cut in that, which is great. And I think that's an unabashedly positive aspect of this development.
Yeah.
That I think we should cheer.
You make the case. I'll put one more to you to see if I can convince you or elicit an answer. Cause I'm push. I just want to be this. Maybe this feels like an interrogation, but I want to make sure. Say you're a MAC school, or you're the MAC, or you're Conference USA. In fact, Conference USA, even better. Currently the bottom of the barrel, these couple of conferences in FBS who have the smallest media rights deals, who have been in Conference USA's case, kind of drubbed by conference realignment, and would seem like a lot of their schools would really be on the border of even participating in, any kind of super league or whatever the highest level of competition is going to be down the line. Like, is there any, let's say that schools in that position take on institutional dollars with an expectation that they will share future returns, and then they find themselves unable to compete anyway. They get left on the wrong side of the plexiglass, so to speak, with whatever the next thing is going to be in college sports. Is that a risk? Like, basically, I want to sort of get a clear picture, because there's so many different types of college football programs. I think you've persuaded me that this is not going to destroy the Big 12, for instance, or the ACC. But I do still wonder about way down the line, in part because I've got my priors, for sure.
They're already destroyed. This just rips the Band-Aid off and lets everybody see the nature of the wound. Like, those schools are never going to become, University of Alabama. They're just not.
Well, of course, but I guess certainly not. And they're never going to win a national championship. But can you get into a position where you are just financially screwed and you can't even sponsor, the same sports that you've been sponsoring, like where you have to roll back, the things that you can do for your players, your fans, because you have to share 20% of a dwindling pie with some firm. Sure,
100%. But I mean, that's going to happen, is my point. Like,
yeah,
the marginal school at the tail of Division I, FBS football is already a money loser and controversial. And most of these schools will just go back to teaching. And let's hope that they have, reasonable academics to lean back on. And you're going to see a bifurcation. There's going to be sports universities and then traditional looking universities. That which can't go on forever usually doesn't. And there's only room for so many big college football programs. And the incumbent advantage here, as we transition into the era of big money, is going to be an incredible moat for the Ohio States, the Michigans, the Alabamas, the Penn States that lock them in, because they have the millions of alumni with money, and everybody is sort of racing for the chair before the money music stops. There's going to be losers for sure. And that's just the nature of capitalism. The US is a capitalistic country, right? And, we long ago shed the purity of the nature of the student athlete, which is a theme of our discussion today. Once you've shed that for real, then all bets are off, and there are going to be losers, right? There's lots of steel companies that are shut down across the Midwest because the Chinese took it over. That's going to happen. Yes. Globalization had its benefits. We all get to have cheap phones and and various other imported goods. But at the same time, lots of people in the Rust Belt lost their jobs. And there's going to be major victims of this transition. And nobody involved is outside of those schools is going to care very much about it. It's just going to happen. That's just our view. We pride ourselves on being analysts and not advocates. Like, we try to measure the pieces on the board and try to see where they're going to be played and not get too emotional about the outcome. I really enjoyed preparing for this podcast and writing the piece that led to it. But I think you just have to be realistic and say, this is what's happening. Yeah, right. The bottom of the barrel, 80th ranked football program is not going to get much money. And they're going to be left with recruiting kids that are predominantly students or couldn't catch on, but still want to have another try at it. Yeah. And that'll be its own, drama, but very few people will see it, and life goes on. Yeah. And I think some of the lower tier schools in the premier conferences are in trouble too. It's not necessarily the case that Rutgers is going to be a winner in all of this, just to pick on, the sort of the bottom end of the Big Ten, for example. So it's not clear to me that just because you were in a Power 5 conference, that necessarily means you have a permanent ticket to the bigger dance.
Yeah.
I think you're going to see a lot of rearranging and the shedding of certain programs that haven't invested in their stadiums or don't have the alumni support that a Penn State does, for example. Like, there's no world in which Penn State and Notre Dame and Miami and Florida State aren't in the picture. And by the way, once that's all locked in with the big cash coming in, they're going to be locked in for decades.
Yeah, it will be a moat. Doomberg, last thing. The one school on that richer end of the spectrum that is actively exploring this, we've talked about the hypothetical about what Texas would be worth, is Florida State, which is very clearly trying to get out of the ACC and struggling to do so, but obviously wants to do that and is pretty publicly exploring private equity. I'm curious, if you were either the athletic director at Florida State or the president of Florida State, what is the type of deal structure that you would look for if you were trying to go to a private equity firm, which they seem to be doing, and secure your financial medium long term so that you could, if you needed to, for instance, go independent and not need to mess around with conference realignment?
So that's a tricky question. I would say, unlike Notre Dame, Florida State doesn't have the length and breadth of the brand for both academics and athletics that say Notre Dame has. And I don't, so my advice, if I were sort of the strategic advisor to the president of Florida State University, is I would get in with a big league and then go get the private equity money, because you'll be way more valuable when you're in a canoe that is durable than where you are now. You take the check now, there's a lot more risk, and risk means lower valuation. And then if you take money at a lower valuation, that kind of says to the rest of the world, like, maybe Florida State isn't in this first cut. They need to find a boat that's in the first cut and then go raise that money. There's a risk here of desperation, right? Desperation is not the source of wealth. And so I think they should reverse the order of it, get themselves into a super league, anchor themselves with their peers. And by the way, as a football school, they are those peers of these schools. There's no question about it. The recent sort of big time game performance notwithstanding.
Yeah.
Secure your foundation and then raise. It would be my advice, but they're probably not going to follow it.
Yeah, maybe a word of caution for Florida State heading out of the ACC without a lifeboat prepared, or thinking that private equity would be that lifeboat. Doomberg, this has been a pleasure. Thank you. You definitely see the landscape through a different set of eyeballs than we do here, and I think it's for that reason it's illuminating to hear from you. Really appreciate it, and I'm sure we'll see you around the platform. It's the Doomberg newsletter at doomberg.substack.com. Got about 250,000 subscribers, and you should check it out. You should join them. Thank you so much for coming.
Thank you, Alex. It was a real pleasure.